So we had a pretty nice 3-day market rally so far. The S&P 500 is near its all-time highs, but something is bothering me a little bit, and I'm turning a little bit skeptical of this market rally, in which before I wasn't. And so I'll explain why. So if you look at the S&P 500, we this chart is pretty much a show of strength. We barely broke below the June lows. And actually, we didn't break below the June lows, and we held support right here at the mid-June lows. And we promptly rallied to new all-time highs, literally in a span of 3 days. So Thursday, Friday, and Monday. So you can see that we're close to 760 after hours. Today we closed at 757. We were up 1.5% on the S&P 500. And the QQQ was up 1.76%. But if you look at these two charts, the S&P 500 and the triple Qs, they look very, very different. The S&P 500, on the weekly time frame, it's been holding the 9 exponential moving average. It didn't break down at all. And you can see that the MACD on the weekly time frame is starting to curl up again. If you look at the triple Qs, it paints a completely different picture. And let me just get rid of all this drawing so you guys can see clearly what I'm talking about. So the S&P 500 is below its 9 exponential moving average. The MACD is clearly breaking down. The RSI is making lower lows. And we're struggling to push above the 9 EMA. But you can see that after hours we're hitting about 705. And that makes me wonder, what is this chart, this bar really going to look like after the week is over? So there's clearly divergences between the S&P 500 and the triple Qs. And if you note historically, every time we had a stock market rally, it was led by the NASDAQ, which is the triple Qs. Technology leads to the upside, not the other way around. The S&P 500 usually lags the triple Qs. And this is not what we're seeing right now, and which makes me wonder, one of these indexes are lying. Either the S&P 500 is really going to drag the triple Qs higher, or the triple Qs are going to drag the S&P 500 lower. And so I believe it's going to be the latter. And let me explain why. So the triple Qs, at this, unless the weekly bar changes, I believe that we're actually going to test the 50 weekly moving average, which is this blue line here, before we get any sort of a real bounce. And if you look at the daily time frame, that we tried to bounce off the 100 moving average. I think the NASDAQ futures actually got a cross on the MACD, but it's barely a cross. As you can see that we have overhead resistance pretty much in this area here. So this area is a big supply area because, bulls and bears have been fighting it out. And I believe that people are going to sell once they get the chance to. When the triple Qs move up to like 714 is the possible area of resistance, 710 as well. And you can see that we're close to 705. So in any case, I believe that there's going to be overhead resistance for the triple Qs. Now, the S&P 500 is a little bit different because the S&P 500 is near all-time highs. So if it decides to break 760, it's pretty much clear skies here. However, something that's, weighing on my mind is the VIX. The VIX is super low at 15.86, but we're in a midterm season. So usually there's going to be a lot of volatility in the fall months leading up to midterm elections. And we still have the US-Iran war that's, kind of weighing on my mind as well. Donald Trump seems like he doesn't really want to make a deal with Iran. He says every weekend that, Iran is begging for a deal, pretty much, verbatim. That's pretty much what he says. And, every time, if you ask Iran, they said that Iran's not making it. Iran's not nowhere near talks with the United States. And so either party, one of the parties lying. Either Iran is lying or Trump is lying. Or Trump is trying to buy time for the stock market. So something's off. Something's off. I can't really put to words. Something is really off in the stock market that makes me think that the downside in the triple Qs is probably not done yet, and we might need to maybe make a double bottom here and retest the 100 moving average, or go a little bit lower and test the 200 moving average. So something like this or this before we get a bigger rebound in the triple Qs. So you can see that we're nearing resistance. The S&P 500 is also, nearing that 760 level. So this is would be like the perfect time for the markets to kind of get a pullback. And one thing I want to mention as well is the semiconductor index, which is one of the bigger driving forces for the NASDAQ index so far. And you can see that we're nowhere near getting a MACD bullish cross on the daily time frame. That's in contrast with the S&P 500 and the triple Q. So if you go back, the S&P 500 just got the cross. The triple Qs on the NASDAQ futures just barely got across, but you can see that the semis aren't really there yet, and it's kind of hugging this 100 moving average. We have pretty important earnings this week led by AMD and SanDisk. If either of those companies don't report well, we're going to get a flush down to the 200, and that's going to drag the triple Qs as well. So, and if you look at the weekly time frame, this chart does not look bullish at all. We're way below the 9 exponential moving average. The MACD is clearly bearish, and there's a lot of overhead supply here. I don't think that, we're just going to take off to the moon for the semis. A lot of these semiconductor stocks like Intel, which had a pretty parabolic run for the last 2 months, almost, 150%, I believe, off the lows. 200%. I don't think that they're just gonna go up back to 200%. I mean, it's gonna take some time. If you look at Micron, who's gonna buy at 1200 now? The stock is around 800. I don't think anyone's gonna run it back to 1200. All these stocks like AVGO, SMCI, right? AMD. AMD has a lot of overhead supply at 600 at that 600 level. I think it's going to be difficult. Like, we just got a weekly MACD cross on the MACD for AMD as well. I believe the Qs will greatly be affected by the movement in the semiconductors. So we'll have to see how this goes. I think that there's still much more work to be done on the NASDAQ. I don't think we just rip straight up. And if you look at the 4-hour time frame on the NASDAQ, you can see that that 200 is going to act as pretty significant resistance. This is where we got the double top that we rejected off of on the 200 moving average that led to this massive decline, or coming right up to that 200 now. So I don't think we're just gonna, blast off to like 730, 740 after hitting the 200. I think we're gonna definitely get some rejection here. Maybe come down here, maybe a little bit lower. We're gonna have to see, right? So there you have it. Hope you guys enjoyed this video. Hope you guys found this analysis helpful. If you guys have any questions or comments, please leave them down in the comment section below, and I'll see you guys in the next video. Peace.